When I was starting off my first company, my dad used to say this to me all the time: cash flow, cash flow, cash flow. And I was like, yeah, Dad, snooze fest. Like, I don't really want to focus on that. I'm all about building a business and solving big problems for my customers. And then one day I realized I couldn't make payroll. My dad was right. Cash flow is king. Because it doesn't matter how much revenue you make, if you actually don't convert that revenue into dollars and cents that show up in your bank account, you cannot pay employees with receivables. And what I have had to do over the years is I've had to mature my financial acumen. I needed to understand how money moved through my business, how to monitor it so that I could then take what I was seeing in a spreadsheet and correlate it to decisions and activities I've made in my companies, so I had created a feedback loop. So what I want to share with you today is 4 specific financial strategies that I know on the surface can sound like a boring snooze fest, but I'm telling you, if you're willing to go there with me, you will walk away with hopefully the answer that could be the thing that's been stopping you from growing to the next level, because you just are not a numbers person. Or I rather talk to customers than understanding how all these bank accounts get reconciled, blah, blah, blah. I don't want to deal with that. I'm not saying you got to learn that. But I'm saying there is opportunity for you to mature your financial knowledge, and this is how we do it. Let's get into it. Number 1 is effective management, okay? I'm going to share with you at a high level how literally every business in the world operates, okay? Number 1 is you have assets. This is your business. This is your people. This is your inventory. This is your products. This is your IP. This is your land. Whatever business you're in, you have assets, okay? And then those assets generate revenue, okay? So hopefully you know how to take an asset and you convert it into revenue, to sales. The third thing is, and this is why it's an effective management. If you're good at managing your business, these are the things you're doing. Third thing is you create profit, okay? Now, the interesting thing about profit, especially from an accounting point of view, is profit doesn't mean anything. You can have profit on paper and it does not show up in your bank. If you've ever experienced this, then you know what I'm talking about. Okay. Number 4. So that's third is profit. Number 4 though, is what's called operating cash flow. This is where hopefully, depending on where your cash flow comes from, because there's been experiences like Enron and FTX and others where, again, the accountants can make it look like a business is producing profits, but it does not convert it into actual good dollars, okay? Operating cash flow doesn't mean actually like real cash into your bank account, because you could have a line of credit, you could have investors, etc. The 5th one, so if you're doing this, you're going from assets to revenue to profit to operating cash flow. The last one is free cash flow, FCF. And just for what it's worth, this is the number 1 metric that Jeff Bezos from Amazon focuses on. So a lot of people have, like, early days of Amazon being a public company, have looked at their stock and go, yeah, they might be growing, but they've never made a profit. And Jeff's like, yeah, but our free cash flow is rock solid. And that is, even how Warren Buffett looks at companies, their FCF, their free cash flow. Okay. So I wanted to share this with you because the first thing you need to understand about any business is how does it produce FCF, free cash flow. And it starts from one end with the assets, converting those assets, hopefully strategically pricing, packaging products into revenue. Then that revenue, hopefully you sold it at a high gross margin enough to make profit. Then you're operating the business and the financial structure and the loans and the capital so that you have a positive operating cash flow. And if you're doing that and you're doing it right, then you should have free cash flow. And that is the game that you're playing in business. You're trying to optimize it. And if you forget to do this, like I did, you can have growth and then not be able to make payroll. You could have your business look healthy from an accounting point of view and then be dipping into your line of credit. I had a client once that literally had 2 years of making so much money, they didn't know what to do with their cash. And because of the way they were managing their reporting, didn't see that they started to eat into the cash. And within 16 months, all the money they had built up was now gone. And then they were losing $40,000, $50,000, $60,000 a month. Well, you can't do that for many months in a row until you have a problem in your business. But understanding that every month that goes by, You need to be an effective manager and not allowing yourself to take wins and then essentially pollute the numbers to see how you're being an effective manager this month. You got to look at on a 30-day window. Number 2 is business report cards. I know you're like, hey, I'm not in school anymore. I don't want to do the report card thing. But here's the thing. I've always been frustrated with how ridiculous financial reports are, okay? And if you've ever heard these terms like income statements or balance sheets or cash flow analysis, these are the tools that at a minimum you should understand what they actually do, okay? We'll talk about how to make sure that they're accurate, but I remember when I was like getting into business, I didn't know anything about the financials. And I was frustrated because like I would read these books of these super successful CEOs. And I was like, how do I become that person? How do I learn how to talk about my business in the language that these CEOs, these publicly traded IPO companies on Squawk Box and all these different news sites, the way they talk about it, right? Earnings per share is EPS. What does that even mean? Good news is you don't even need to know this unless you do decide to go public. Then I'd highly recommend you hire a CEO to do that. But what you want to do is understand that it's kind of like a high-end sports car. Your income statement is essentially the performance of your race car, okay? The balance sheet is the car's worth, and then the cash flow is essentially the gas in the engine and its ability to move gas and propel the car forward. And if you understand this, then you realize like the income statement is kind of like a, report over time. The balance sheet is kind of like a current state of value of like the business. It's got all the different assets and liabilities. And then you got your cash flow statement, which is your ability to produce cash from your business and forecast, hopefully, into the business so you understand it. So if you've never sat down and asked your accountant, this is what I did with my buddy Dave. I said, hey, Dave, I don't know how to do this. I heard you're really good at business. Teach me how to read these documents. And he showed me how to connect this number is this number on the balance sheet, and this number is this number on the cash flow statement. And all of a sudden, the whole thing got unlocked, okay? So I'm not here to do a masterclass in accounting. I'm just telling you that if you can get your accountant to teach you this, you can get your friend Bob to teach you this, you can teach anybody. Go on YouTube. Go buy a course on Udemy. Learn how to read these 3 documents. It is enlightening because once you understand how they're all correlated, then you can speak accountant, which is like accountants do not know how to talk entrepreneur. You know how to talk entrepreneur. It's probably sales pipeline and customer onboarding and like all these weird spreadsheets, but then you can coordinate both of them to really give yourself an advantage. Number 3 is financial management. Now, if you've ever been in business and you like thought you were doing good and you're looking at the numbers and your pipeline's there and your sales are coming through and your inventory's there, and all of a sudden you run into a major issue. It's like you had all this cash tied up in inventory or work in progress, or you had 3 payrolls come out in 1 month. Those are always fun months. I've been there, and here's what I've learned is that all of these problems can actually be avoided if you understand 3 parts to good financial planning, okay? High-level financial planning. These are 3 things. And the cool part is these are the same 3 things that you need for your household. A lot of you guys don't want to have a budget for your household because you're like, hey, I make a lot of money and I don't want to think about money. I like to feel like I have abundance, and I like to, visualize and focus on possibilities and just live in gratitude and abundance. And I don't want to look at the numbers. Here's the deal. You have to, because they don't lie and they tell a story. And the more you focus on them, the better they get, which is super awesome. So 3 things you got to do. Number 1 is you have to figure out budgets. Budgets are there to create a feedback loop for teams to know how well they're able to predict the future. If people can't budget, then it means they don't understand their business well enough to predict a future state and what that investment and structure is going to need to look like so that you know what your budget is every month and every quarter and every year to achieve that. So to me, a budget process is almost like starting off and saying, how good of a guesser am I? And then as the year goes by, you actually get a feedback loop. I'm a good guesser. And if I'm a good guesser, I'm a good manager. And if I'm a good manager, I'm a good leader, and leaders produce results and outcome. And that's what I want for you, okay? Second one is to create a forecast. Now, The problem with the forecast is that most people have never done this before. So they look at a forecast and they're like, hey, I got to forecast forward. What do I think I'm going to do with these stuff? But I've never done this before, so how can I be accurate? Here's the way I look at it, is I then talk to people that have been 18 months into the future where I've been. These could be consultants, these could be advisors, it could be your accountant, it could be your lawyer, it could be whoever you know that might have a glimpse into the future of your industry. Look at the historical as well to use it to create a forecast. Now you have a forecast. So you have a budget for what you should be spending and you have a forecast. The third thing is the reporting. Now, when I was building companies in the early days, I honestly didn't look at my reporting often. Most of the time I was using my bank account as a feedback loop to was I doing okay? Zero budgeting, zero forecasting, zero reporting. However, it gets you to a certain point until you hit these natural roadblocks where you have cash flow issues, where you have discrepancies in your tax exposure, where your accountant calls you and you have a tax bill that is 3 times larger than the one that you've been putting the money aside. I mean, literally, there's been times in my career where I strategically, through the reporting of the people, put the money aside to find out that somebody miscalculated the taxes and now you have a bigger bill. Now, I've always operated using a very prudent model because I wanted to make sure I have operating expenses covered, et cetera, in case of a rainy day. So it wasn't an issue, but I share all this because if you don't have the discipline to sit down, I work with my clients on this all the time, have a budgeting process, a forecasting system, and a reporting structure so that reporting gets disseminated to everybody on your team. They can manage how they're doing against budgets. And then you can also look at forecasts to see if anything's changed in the business so that you can readjust and set some new targets. That is how you do good financial management. Number 4 is reporting secrets, okay? I want to give you some very specific, absolutely non-negotiable things you should be getting reports on. The first one is a daily cash report. Every day across my companies and my personal net worth, I get a financial cash report in my inbox so I know the cash movement of my companies and my personal net worth on a daily basis. Why? If there's anything that's out of the norm where I know what my normal cash movement is and it jumps up 2 or 3x, boom, I see it. Some of you don't have a pulse on your financials and things are moving in and out of your business, and you might have somebody that invoices you for this large amount for something that you never even bought, and your finance team picks it up, your assistant picks it up and sends it over and it gets paid, and all of a sudden you're like, whoa, hey, what happened to that money? And then they're like, oh, we paid off this vendor. And you're like, what is that vendor? What do they do? I see that happen all the time. So that's number 1 is you want a daily email cash report on all your businesses and ideally your personal. And if you have an executive assistant, give them the task to pull the report, to put it in a spreadsheet, copy and paste the spreadsheet, put it into an email, hit send. I file it away and I look at them every morning as just a way to do a sanity check. Number 2 is on a weekly basis, you want to be looking at the cash flow forecast, right? You want to get your team to update any cash flow forecast. You want to look at sales. You want to look at productivity and assets. So essentially your assets' ability to convert itself into revenue and your operating cash flow. On a weekly basis, even though you can't close the books, you should still get the team to do as much reconciliation across your accounting so that you understand how the business has moved week over week in regards to expenses and revenue. That's a weekly report for sure. And then finally, on a monthly basis, you want to understand the 3 big ones. You want to get a P&L. I always try to get it 10 days after the month close. So mandatory 100% on the 10th. You want to get the profit and loss. You want to get the balance sheet so you know kind of how the asset or the value of the business is moving forward, and then also where the cash goes, your cash flow statement. That is non-negotiable. If you feel like you don't have the financial maturity you need to go to the next level, these are the 3 specific sequences and timelines for reports: the daily cash, the weekly reporting for the ability of the asset to be productive, and then finally, how well you did kind of getting the 3 business report cards, scorecards, so you know what's going on. If you made it to the end of this video, congratulations. I know I tried to bring some life into the financial reporting, but it is one of those areas that is not sexy. It's not fun. It's not chocolate. But man, is it broccoli and is it important? And if you nail this, you will not only elevate your financial maturity, but you will elevate your ability to lead. And that's why it's important to understand the financial structure and flow of cash through your business. If you want my specific report card for how I look at what I call the precision scorecard of all my companies, you want that template and structure, click the link below to download your copy. It's my gift to you. You just got to click the link, download the template and the structure and how to set it up. I want you to have that visibility and optics into your business. I hope this video finds you awesome, and I'll see you next week.